How's it going, everybody? Today I'm going to be breaking down how I was able to get a $9,000 payout yesterday and a $7,500 payout today, which all in all that will put us at $16,500 in payouts just from this week. So I'm going to go ahead and break it down to you guys. I'm going to show you guys proof. I'm going to show you the statistics on the trades that I'm taking, and then I'm going to be showing you guys what I've been doing to consistently build these accounts and be able to get payouts just like this. At the end of this video, I want you to take away three things. Number one is how you can replicate this and put it into your own trading to be able to get payouts just like this. Number two, I want you to understand why that works and how it is perfect for prop firm trading. And number three is going to be the most important, reflecting on your own trading and then looking at what I'm doing and how to actually mix those two together, because the best thing for you to do as a learning trader is not completely change your trading style, but just adjust it to what works for you and what you understand, which means that somebody with my experience isn't going to change the way that you're trading, and I want to optimize it so that your strengths remain your strengths and we make it even stronger, and then take away the weaknesses that you have, and that is going to allow you to make progress and overall become a better trader. So first things first, what we're going to look at is the statistics for these accounts. So gross P&L says $1,900, and that is because I already took $1,500 out of these accounts. So if we take a look right now, this account is sitting at $1,900 after taking a $1,500 payout. If we look at the percent of profitable trades this week, I have a 100% win rate, and I will get into how I've achieved that later on in this video. But something that I really want you guys to note from right here, if you look at our profit trades, I want you to look at the amount of winning trades, the amount of winning contracts, and then something I really want you guys to pay attention to here is if we look at under profit trades, you see the average winning trade is only $600. So what that means is that before I took a payout in these accounts were sitting at roughly $3,400, which means that if the average winning trade is $600, to be able to achieve that and get that much profit, that means that we are not taking any crazy risk reward trades. A lot of people are lying to you when you think that you have to bottom and top tick to be profitable. That is not the case at all, and I'm going to show you guys exactly what you guys can do to be able to replicate these statistics. Very high win rate. You're not going for anything crazy. You're just hitting the base. Now, obviously, you guys need to see the proof. This is the payout certificate. As you guys can see, this was 8 hours ago. So we received the payout. It was $9,000. After the fees and everything, $8,700 got sent to my wallet. So that is one of the payouts that we took yesterday. And then today, we see that these Tradeify accounts we have eligible for a payout. We hit the profit goal. We just have to hit one more winning day, which today we actually achieved. As you can see, these accounts are all eligible for a payout now. After we update today, it's going to be $7,500 from these accounts as well. So now that we got the proof out of the way and that I proved to you that I actually know what I'm talking about, that you guys can trust me with the advice that I'm giving you, let's get into exactly what I've been doing to be able to get this progress and to be able to get these payouts. Now, right here, I pulled up some of the trades. If you guys aren't following me on Twitter, I post my trades on there every single day. That is where I got these screenshots from. So if you look at the trades that I took this week, these are just a couple of the examples. I'm missing about 2 right now, but basically what we see is, if we pay attention to what exactly is happening here, there's only one of these trades that you guys can see, which is obviously this one where I entered at the bottom of the range, exited at the top of the range. This trade was pretty much perfect. You couldn't have gotten a better entry and an exit. At the very bottom is where I entered, and at the very top is where I got my exit. We perfectly played that out. That was precision. But the other 2 examples, what I want you guys to take note of is that these trades aren't anything crazy. There's nothing absolutely insane going on. We're not seeing that we're taking 1 to 20 R. These are basically just 1 to 2 or 1 to 1.5 risk reward trades, which means that for every $100 that we're risking, we're normally making around $150 to $200. Now, what's really important to look at here is that for prop firms specifically, what they're going to be looking for is consistency and you being able to log the trading days. Most prop firms, they have a 30 to 40% consistency rule, and most prop firms also want you to get 5 winning days before you can take a payout. What this means is that for the 2 types of trading styles, there's only 2 of them. You're going to have a high win rate, which is going to be prone to having a lower risk reward. That is what you see here. We're winning most of the trades that we're taking, but the trades that we're taking, we're typically risking just a little bit less than what we'd be making on that. On the other hand, some people have a lower win rate, which means that they're not winning a lot of the time, but when they win, they're risking just a little bit to make a lot. Now, with each of these, there is a trade-off. This basically means that if you have one, you're less likely to have the other. It's extremely rare to have a high win rate and a high risk reward. It is very difficult to sustain something like that. Yes, it can happen, but it's not very sustainable over time. You will see that statistics start to fall off. Now, with that being said, what I want you to note is that with these payout rules, that pretty much every single firm has these 2 things at least. Which one of these is going to allow us to get to this the quickest and the most efficient? And that's exactly what I'm going to be showing you guys today. Why the higher win rate is better for getting payouts, because you're logging winning days more often and it's also more consistent over time. Now that we've gotten through the trading style that we want to accomplish and we understand why that works the best for being able to get payouts, I'm going to show you guys exactly what you can be doing in order to replicate these kinds of results. Now, the best example example that we're going to find for this is actually going to be the trade that I ended up taking yesterday that secured me the $9,000 payout. Now, the best example we're going to find here is the trade that I took yesterday in order to secure that $9,000 payout. Number one, I'm going to run you through exactly what my thought process was going into market open. And number two, I'm going to show you the fundamental trick that I use to be able to guarantee that my win rate is higher. First things first, my thought process. So we see that right here, we have the New York 930 opening candle. Now, if we look left a bit, what you can see is that the Asia session lows are right below where the market open actually dumped to. So what we see is that market comes down. We sweep out the Asia session lows. So as we can see right here, the price sweeps out those lows. We also get this inversion here on this fair value gap. Now, a lot of people, what they would have done is they would have taken this at the candle close. They would have entered. Stop loss would typically go somewhere around here, and then you could target these highs. Now, something like this, yes, it played out, but what a lot of people go wrong is that these types of plays don't always play out, and more lately than ever have we been seeing setups like this fail because of price being undecisive. Now, the easiest thing we can do to get rid of any chances of this happening to where we see a good setup and then it doesn't play out is that we have to simply wait. I'm going to draw you guys an example of how exactly this makes sense, and this is something that I teach to my students. Now, after I taught this specific lesson to a lot of my students, they saw crazy progress in their trading and were able to make a complete 180 with the amount of progress that they were making because they were no longer taking losing setup and they were giving the charts time to be able to show them what wanted to happen. In order to take our trades and be profitable, we have to analyze what the chart is actually showing us before we enter a trade. So if we're looking at the chart, we're trying to figure out what's going on. The chart is drawing us a picture, and what we are doing is we're trying to guess what the chart is drawing. Now, if you guys had to take a guess on what the chart is drawing here, you'd probably say what? This is looking somewhat like a sailboat, right? We have the boat right here. We have the flag obviously right here. Now, a lot of us are jumping the gun by trying to guess what exactly the chart's trying to do without giving it the full context. The entire time the chart was still trying to draw, and if we would be patient and try to find out what the chart was actually drawing, the whole time it was a smiley face and not a sailboat. But because we're not giving the chart enough time to be able to show us what it wants to do, and we end up making the wrong guess simply because we are not giving the chart enough time to draw the full picture and then be able to take our trade and be able to give the chart enough time to show us what wants to happen. That is how we achieve a higher win rate. We wait for the chart to draw out what's going on, then we take our guess within full context. So the reason why I didn't take this trade yesterday is because I was waiting for the chart to still draw what it wanted to do. Because if we look to the left right here, we see that, okay, yes, we did inverse that gap, but we also have a really big 1 minute right next to us that even if we did take our entry here, yeah, we might be in profit for a little bit, but who's to say that we didn't come up here and then we wanted to go down after tapping an equilibrium of the range? That is why I didn't enter. I wanted to see more. Because instead of taking this entry here, what I see is I'm seeing this 1 minute gap right here. Who's to say that we don't come up? Even if we inverse this, who's to say that we don't come up, tap into equilibrium of the fair value gap right here, and then continue lower? I want to see the chart play out more and give it more time to breathe before I end up taking my guess, which is why I do not end up taking that trade, and instead I wait a little bit. I see, okay, price seems to reject there, but I want to see for a stronger close, and we end up getting a stronger close right above. You see, okay, we're continuing to close higher. At this point, we are way above the equilibrium of this gap, which is the consequent encroachment. I think that right now is a safe place to say that I think we continue higher. We didn't fully reject off of here. Yes, we had hesitation, but we ended up closing back stronger. In that case, I would say, okay, I think the price is going to go higher. And with that patience, what we can see is, okay, we get our bias, we get our understanding of the market, and now we're able to see, okay, maybe we want to take a retracement. Now, my entry yesterday was right off of this. We ended up coming back down a very, very tiny 1 minute right here, and then also what some would consider an order block right here also gets tapped into, and the trade that I end up taking right here, stop loss goes right around here, and then exit right there. And what we can see is we're basically left with zero drawdown in this trade. Now, because we leave the chart time to breathe, what happens is we end up getting the retracement. And so my entry is to what some would consider an order block. I end up getting filled right here. What we end up seeing is that we come down. This is where I grab my entry. My take profit goes up here, and then my stop loss goes just below these lows right here. You can see that we have a pretty decent risk reward. For this, it was around 2 RR, which means that for every $200 we're making, we're only risking $100. We end up grabbing our entry there, practically zero drawdown, and then we end up seeing our take profit hit with zero hesitation. A lot of you guys are sitting inside these trades for hours, maybe a lot of you guys are sitting in these trades for 20, 30 minutes, maybe even hours, and you're sitting through a lot of drawdown, and that can be a lot, and that can be really heavy on your psychology. It is so much easier to take trades like this to where not only your win rate is very high, you have a decent risk reward, but you're also not sitting in trades for too long waiting for your stop loss to get hit and having your emotions go all crazy. And with this trade right here, my take profit right here gets smacked. That is where I was able to get the $9,000 payout. And it is simply because we're not trying to catch the whole thing. We're not trying to eat the whole pie. We just want to take a piece of the pie. That is exactly how you replicate these kinds of results. I had a 100% win rate this week. I ended up making $16,500 in payouts because of this. Something that I've been preaching a lot to my students is just hitting the base. What that means is you don't have to go for $1,000, $2,000 days. You just have to stack maybe $300, $500 days. And over time, that will add up, not only allowing you to get that consistency rule compared to maybe getting 1 or 2 payouts a month, you'll be able to get 3 or 4 payouts a month using things like this. So the key takeaways is number 1, I want you guys to really focus on hitting the base and stacking smaller days over time and letting that accumulate to more profits. Number 2 is taking a piece of the pie and waiting for the chart to completely draw out full context of what it's trying to do and then take your guess. And number 3 is understanding that the fact that if you want a higher win rate, you're going to sacrifice a little bit of your risk reward. And the same thing, if you want a really high risk reward, you're going to sacrifice win rate, and why the first option is going to be better for prop trading. Those are the 3 things I really want you guys to take home. I hope you guys enjoy this video. If you guys are not understanding how I'm making so much money with this, it's because I'm using prop firms and I'm copy trading. The prop firm that I was able to make $140,000 from last month is 80% off right now. If you guys want to go check them out, the link is in the description. If you use my code AVAL, you get that 80% off. And also TradeSyncer is the copy trader that I'm using. If you guys look at my Twitter right here, I have screenshots from TradeSyncer every single day. I actually use this software and it makes it so easy to copy trade across prop firms. But not only that, you only have to execute once on one account and it copies to all of your other accounts. And you can do that on TradingView. As you guys can see, I actually use the things that I'm telling you about, and these are real results from the things that I make videos for you guys on. So if you guys enjoyed this, please make sure to hit the subscribe button and check out the link in the description. I have a free trading course that shows you so much of the stuff that I talk about here, but more in depth and more concepts that are exclusive to the people who are in the free trading course. So make sure you guys go check that out. I love you guys. I'll be seeing you guys in the next one. Peace out, everybody.